Morning everyone, my name is Sakiba Ryan, the resident oil trader here at JNF Capital. I'll be looking to give you an insight into the movement in crude oil this past week and hopefully in the coming week as well. Before I get started, I'd like to let you know that investing in the financial markets is not for everyone, as it is possible to lose more than your initial deposit. For those of you who have had a word with myself or my team, you know what I try to do is identify what the bulls and the bears are doing, and simply align my funds in the same direction as the most powerful entity. I don't fight the movement, just try to align myself with it. So let's have a look and see what the bears are up to. Okay, so what are the bears up to? There's not a lot of bearish sentiment out there, but it mostly revolves around supply and demand. One of the major prevailing themes at the moment is Iran. By the end of June, there has to be some sort of resolution between the United States and Iran regarding their nuclear program. Now, in the event that there is a positive outcome, of this meeting, traders are concerned that there's about 20 to 30 million barrels of crude oil sitting in offshore floating storage, that's controlled by Iran. Now, obviously, there is a major concern that if there is a resolution to the nuclear talks, and that 20 to 30 million barrels of oil makes its way into the market, that will, of course, it will have a major impact on the supply side of things, as far as crude oil is concerned, and a negative impact on oil prices, of course. One other thing that we're looking at is the frac log. Now, the frac log currently illustrates that there are about 5,000 drilled wells that are not currently producing. Now, the anticipation is that the higher the oil price goes on this particular rebound that we're getting, the closer we get into profitable territory for the break-even prices for those particular regions, which is generally in the region of about $65 and $75. As we start coming into that price range, what we are anticipating is that a lot of those wells, those 5,000 wells that have been drilled and not currently producing, if they would start coming online and let's just say at an average rate of 300 barrels a day per well, you're looking at about 1.5 million barrels roughly increment in production per day to come online. That, of course, is a major, that's a very significant figure. If this oil does come back online, it's going to have a very negative impact on the price of crude oil. This is one of the reasons that there is a strong theory that the roof of this current bull rally that we're having should be in the region of $65 to $75. If this is breached, it could be very interesting to see what kind of sentiment can get us above this range, if we even see it. So that's what the bears are looking at. Let's have a look and see what the bulls are. So what are the bulls looking at? Why is the price rallying? Well, we've had some pretty significant information out of Iraq. Of course, anyone that watches the news must have seen this as well. Geopolitical tensions at the forefront once again. ISIS have basically attacked a certain town in Iraq, taking it over completely. This is their most significant move since last June. It seems every time summer comes around, some sort of geopolitical tension pops up from somewhere. Now, of course, Iraq is amongst the top tier of oil producers in the world. Any form of geopolitical instability in that region will affect oil prices. Hence, we've had a bit of a rally, although it has pulled back a little bit. But the market is obviously very sensitive to any unrest in Iraq. Another thing we're looking at is the driving season. Now, one thing that we're looking at is gasoline prices. The gasoline prices in the US are still significantly low. What this tells us is that if there was let's just say an increment in purchases of larger vehicles, SUVs and the like in the US, due to lower gas prices. This generally would indicate that, of course, there'll be more gasoline consumption. With driving season coming up, in the beginning of summer and all, we then obviously anticipate more consumption of gasoline. More consumption of gasoline generally relates directly to a draw in crude oil, stocks. So basically, that's fairly bullish for the price of oil as well. Now, the recent weakness in the dollar has been also quite significant. The dollar has been on a rampage, as everybody knows, but over the last couple of you would say weeks, it has been coming off. Nothing goes up in a straight line, so that inverse correlation between the dollar and the price of crude oil is still alive and well. So basically, it has come off quite a bit, and that has supported oil prices quite significantly. Comes off any more, it will further support the price of crude oil. Last but not least, we're looking at basically supply and demand type of things. Now, for the last 15 weeks, crude oil inventories have been building, okay? But in the last 2 weeks or so, we've had draws of crude oil, somewhere in the region of 2.1 million barrels and 3.8 million barrels. That, of course, indicates that there is crude oil being refined. That could be potentially because a lot of the refineries that were down for maintenance have come back online. And generally, there is a bit more consumption of gasoline and crude oil as a result. You couple that information with the information we've got on Baker Hughes regarding the rig counts. Now, the rig counts show that there's been another drawdown in a number of rigs active. Another draw of, I think, six more rigs went down last week, totaling now the total number of rigs in operation are somewhere about 888 rigs. That is roughly just above 50% of total rigs since June last year. So, of course, that is very significant. Fewer rigs in operation, draws in inventories, driving season coming up, inverse correlation with the dollar, and at the forefront, geopolitical tensions. These are all very strong reasons for why crude oil prices are rallying and may continue rallying. Let's have a look and see how we've been trading this last week. So those were the bullish and bearish arguments in the current oil market. Basically, if you'd like to know the exact levels that we're trading here at JNF Capital, my exact entry point, exit point, where to place a stop, how to manage your position sizing in the market, and basically how to benefit from the price of crude oil. Please don't hesitate to get in touch with us, with myself directly or with my team. My contacts will be available on the following screen. You could also follow me on Twitter. Last week I did give away a couple of levels that I was trading around on Twitter. So that is another way to get in touch with myself as well. So for everyone out there that's trading, obviously be careful, trade safely, manage risk well, and I look forward to seeing you next week. Thanks.